What's good, sellers? I'm Venera, back with another video. Shout out to the Amazon Launchpad, Fields of Profit, Flips for Miles, Buy Box Bandits, and the most important shout out to my ride or die, Tiny Travel Chick. I'm gonna answer a popular newbie question. How much can you make selling on Amazon? You see a lot of numbers out there over how much revenue is sold, but rarely does anyone tell how much profit they actually made. It's a question that I see asked a lot from time to time, but it's really a question we're all trying to answer. It's a really good question. That used to frustrate me before I became a seller because it's the whole reason we're trying to do this, right? We got rent or mortgage and bills to pay for. So I'm gonna answer this question, and all I ask is to like and subscribe to help me keep making free content. In fact, I'm gonna do more than just answer it. I'm gonna answer it and show you how to figure out the answer. This will help you just starting out, as well as when you're in the middle of your business trying to make decisions. You just need 3 pieces of information: cost of goods sold, or COGS, revenue, and net profit. This will help you figure out your CR ratio and your net profit percent. And those 2 things help you figure out how much you can make selling on Amazon. If you're a newbie and don't have this info yet, it's all good. I'll give you another way to figure this out. Now first, I'm gonna go over what exactly is COGS, revenue, and net profit. So if you already know what those are, skip to the section where I go straight to the formula to figure out how much you can make selling on Amazon. First, COGS. That's what the seller pays the supplier for goods to sell. The costs include the price of the product, obviously, plus any sales tax, plus any shipping the seller charges to deliver the product. It doesn't include any other seller expenses like gas for your car, shipping the products to Amazon, or shipping the products to your customers. Revenue is simply how much you sell the items for. It doesn't include anything else you might charge the customer like sales tax or shipping. So, the first thing you want to calculate is your CR ratio. What is that? All right, let's say you want to sell apples, and you find a supplier selling apples for $1 each. The supplier sells you 1 apple for $1. Now, you turn around and sell that apple to a customer for $2. For every $1 you pay for products, you sell for double. So that means your COGS to revenue ratio, or CR ratio, is 1/2, 0.5, or 50%. Next is net profit, also known as earnings before interest and taxes, or EBIT. You calculate net profit by taking revenue minus COGS minus operating expenses. And those operating expenses are like your mobile phone service, internet, gas for your car, shipping to Amazon, rent, or any meals while you're working. Pretty much any expenses you have running your business. It doesn't include income taxes, credit card interest, or loan interest. So what you do is you calculate net profit percent by dividing net profit by revenue. For example, if you sold $1,000 worth of product, the product cost you $500, and your operating expenses is $400, your net profit is $100. $100 divided by 1,000 is 0.1, or 10%. To figure out how much you'll make, take 3 steps. 1, calculate your CR ratio. 2, calculate net profit percent. 3, figure it out. If you're a newbie and don't have any numbers, use conservative estimates. For CR ratio, use 50%, and for net profit percent, use 10%. All right, let's see how to use this data. First scenario, let's say you make $5,000 a month at your current job and you want to know when you can go full-time on Amazon. Pretty typical question, pretty typical scenario. First, divide target income by net profit percent for sales revenue. So let's say you're a newbie, so use 10% as a conservative net profit estimate. $5,000 divided by 10% is $50,000 revenue needed to sell per month. Next, how much inventory do you need to sell $50,000 in a month? Multiply that by your CR ratio. Again, being a newbie, use 50% as a conservative estimate. 50% of 50,000 equals 25,000 inventory you need to purchase. Next scenario. Let's say you have $5,000 of inventory. How much will you make off that? First, divide by CR ratio for revenue. 5,000 divided by 50% equals $10,000. Next, multiply revenue by net profit percent. 10,000 times 10% equals $1,000. So, at 50% CR ratio and 10% net profit, you'll make $1,000 off a $5,000 inventory purchase. All right, there you go. Also, remember, the lower the CR ratio, the better price you're paying for inventory, or the higher your selling price, or both. Either way, it's a win. Also, the higher net profit percent, the better profit. So these two numbers are a good way to measure your business. Until next time, happy selling.